Hello, everyone. Chapter 11 covers auto and homeowners insurance. We'll look at the explain insurance and risk management, describe the role of insurance companies, provide a background on auto insurance, identify the factors that affect your auto insurance premium, explain how to respond if you're in an auto accident. We'll then switch to homeowners insurance, describe the financial coverage provided by homeowners insurance, describe the use of renters insurance, discuss what's known as an umbrella personal liability insurance policies, and explain how insurance fits within your financial plan. So you ready? Let's go. Property insurance ensures that damages to your auto and home are covered. It is a law in most states that you have auto insurance coverage. And when you have a home that includes a mortgage, you're required to have homeowners insurance coverage as well. Excuse me. These policies protect your personal assets from a liability. What's a liability? The amount that you may be required to pay someone for damages that you have caused. So if you're in an auto accident and you do not have auto insurance coverage, then you're responsible for any damage that may have been caused to that person's vehicle, as well as any personal injury to them in the form of medical need. Insurance is a primary function to maintain your existing level of wealth. So, in other words, insurance protects your assets, allows you to maintain your wealth. Risk. What is risk? The exposure to events or perils that can cause financial loss. So, we all have risk when it comes to auto insurance, risk to our homes as well. So we try to do what's called risk management, which are decisions that we're going to make about how to protect against this risk. So we all face risk when we're driving, but risk management says these are decisions you're going to make to try and protect yourself against risk. You could say, well, I'll just avoid risk altogether. I do not own any assets. So of course, if I do not own an asset, do not own a home, then perhaps I don't necessarily need to have auto insurance or homeowners insurance. But if you're a renter, we'll talk about why you need to have insurance. Reduce risk, limit the dollar value of your assets. So what we're saying here is that depending upon the value of your automobile, you may say, well, my car is not worth much money, so I'll get auto insurance, but I'm going to limit the amount of exposure because my car doesn't have much value. And we'll discuss that in greater detail. Or you can say, well, you know what, I'll just accept the risk. Feasible when likelihood of financial loss is low. So again, everyone is required to have auto insurance policy in most states. Some choose not to have auto insurance coverage, meaning they're going to accept the risk, okay? Meaning that if something has to take place, they're responsible for the actual liability or any damages. Now, buying insurance differs from other purchases in that there is no immediate benefit. So what you're doing when you have auto insurance or home insurance, you're buying protection. You're saying in the event that something happens, you're covered. Now, it's quite possible that you may have auto insurance and never have an accident. It's quite possible you can have homeowners insurance and never have to file a claim for homeowners insurance. But you have the comfort of knowing that if something was to happen, you are protected. So insure against the risk, you're going to pay what they call a premium. That's to the insurance company. That's the cost of obtaining insurance. So whether you have insurance through Allstate, State Farm, Geico, whomever, when you pay that premium to that insurance company, that's the cost of obtaining insurance. let's talk about the economic impact on a decision to insure against risk. So when conditions are favorable, people are working, they have money coming in, people are willing to purchase or increase their insurance coverage because they have the financial ability to pay those premiums. When conditions are weak, they tend to reduce insurance. So yes, sometimes people do allow their insurance to lapse because their finances have changed. Okay, but I don't recommend that. You want to always try to keep insurance coverage. Okay, so consider the possible damage in reducing the insurance coverage and say, well, I may get a cheaper or a cheaper policy that doesn't provide as much coverage. Yes, you can do that, but again, think about the impact of how reducing your insurance coverage may cause you to have a liability in the future. Now, of course, there are different types of insurance. There's property and casualty insurance for autos and homes. There's life insurance. There's also health insurance. We'll look at the relationship between the insurance companies and the premiums. So again, the premiums are the amounts that you pay each month or once a quarter on an annual basis to the insurance company. Those payments are known as premiums. Okay? So this chart just shows the potential financial loss and then the protection you can have to prevent this type of financial loss. So of course, if you have a car accident and damage your car, you're going to have car repairs. You're going to have auto insurance for protection. Perhaps you have someone in the car with you and they're injured. There's going to be medical bills and may even sue you. You want to have auto insurance for your protection. You have a car accident in which the other driver in the car is injured and it was your fault. They're going to have medical bills and probably try to sue you for other damages. Again, auto insurance protects you in this situation. Your house is damaged by a fire. You're going to have home repairs. That's why you want to have homeowners insurance. Your neighbor is injured while in your home. They're going to have medical bills and liabilities, again, protected by your homeowners insurance. Or maybe you become ill and need medical attention. That's why you're going to have medical bills. That's why you have health insurance coverage. Or somebody developing an illness that requires long-term care, medical bills, you can have long-term care insurance. You become disabled, now you have a loss of income. You may have what's called disability insurance, or you die while family members rely on your income, loss of income, you have life insurance. So all of these different types of insurance policies are there to protect you, protect your assets, protect others, and protect your family as well. Okay? Underwriters. Underwriters are the individuals who work for the insurance company, and they're hired to calculate the risk of specific insurance policies, decide what policies to offer, and what premiums to charge. So the underwriters, say for State Farm, will determine what type of insurance policy they want to offer, whether it's going to be auto insurance policy, homeowners insurance policy, life insurance, medical insurance. They'll decide what type of policy they want to offer. They look at the risk of those different policies, and then they'll make a decision on what premium should be charged for their different policies. Now, perhaps you have insurance through your employer. So I have medical insurance, life insurance, disability insurance, all through my employer. They have what's called group insurance policies for employers. That's when the company will have a policy for all their employees, and they're allowed an actual discount because the people group together. So typically the company will pay a portion for these insurance policies, and then the employee pays a portion as well. Okay. The role of the insurance agent and the brokers. So the insurance agent will recommend a policy for the customers. They'll indicate what they think, how much coverage you should have, what type of coverage, plans, that information again is going to be recommended by your insurance agent. Now, there are some insurance agents that we call captive insurance agency. They work for one insurance company. So you may think about the Allstate insurance agent that works just for Allstate. But then you also have independent insurance agents who represent many different insurance companies, and they're going to try to find the best policy for their customer amongst those various insurance companies. Okay? There's a website called elmbest.com that provides information on how insurance companies are rated. We want to make sure that when you're buying a policy, now of course some are cheaper than others, but you want to make sure that you're buying insurance from a reputable insurance company and not just buying insurance from them because their insurance is cheaper than other companies. Okay? Let's talk about auto insurance a little bit more in detail. So auto insurance protects you from financial losses from damage or liability resulting from automobile accident. So if you're in an accident and you have automotive insurance, it's there for your protection. Now, of course, the cost for insurance has increased in recent years. Now you have these personal insurance and injury aid attorneys that have gotten involved, and their job is to get funds for their clients who may have been injured in an auto accident. And because they're trying to get as much money as they can, that does have an impact on the cost of the insurance policies. Now, there are certain companies that have a no-fault insurance program where they do not hold a specific driver liable for causing the accident. For example, I think it's Allstate or either State Farm have the accident forgiveness program where they'll forgive you for your first accident and it does not have an impact on your insurance policy, because most of the time when you're involved in an accident, it does cause your insurance premiums to actually increase. So the purpose of programs like this, the idea is to try to reduce the cost of your insurance premium. But again, not every company has these type of policies. That's why you want to do research to see what type of premiums or policies are being offered by these different insurance companies. This chart just shows the average premium on auto insurance from 2008 through 2012. And as you can see, it's constantly going up. So, of course, we're in 2020, and yes, auto insurance premiums have increased in 2020. Okay? Now, an insurance policy is a contract between you, the policyholder, and your insurance company. Make sure you understand the specific coverage that's been provided by the insurance company, the specific coverage that's been provided by your actual policy for your vehicle. There's coverage A, which is liability coverage. If you have coverage A, this is saying that in the case of body injury liability, it protects against liability associated with injuries caused by the policyholder. So again, if someone is injured because of an accident you caused and you have coverage A, it's going to protect you and provide the funds to take care of their liabilities. It also consists of property damage liability coverage, protects against loss that result when a policyholder damages another person's property with his car. So again, if you have coverage A coverage and you hit someone, your coverage is going to protect their vehicle and your coverage will pay for the damages absorbed by that other person. It's some good stuff, ain't it? Yes. So we're going to come back and talk about other types of coverages provided by your auto insurance, and we'll then talk about homeowners insurance as well.